Hey, hi everyone. Welcome to another video. So today we are going to discuss about Lorentzian classification ML model and how it could be used in forecasting, in trading, and at both intraday, positional, and swing trading. How we can use it, and whether hedge funds use this Lorentzian classification AML model, how it came into being, who invented it, and how successful is this Lorentzian classification AML model, and what are the returns that this model AML model generated with some specific examples. So that's the topic for today. So Lorentzian classification, it's a machine learning classifier basically. So it's a machine learning model, and it's a classifier. Okay, that uses Lorentzian hyperbolic distance. So this Lorentzian hyperbolic distance is more of a physics concept. It is used in relativity. It's a physics concept, but it is applied to financial markets also, and yeah, so that's what this is. So this machine learning classifier uses Lorentzian hyperbolic distance, which is a mathematical measure sensitive to hierarchies and sudden market events. Okay, for nearest neighbor classification in time series data. So based on this Lorentz model from theoretical physics, relativity, this is basically derived, and it came from, and it captures price time warping. Okay, example, how markets react to events like FOMC meetings. So that is what it is very good at capturing, how markets react to events like some FOMC meetings. And this model came from theoretical physics, especially from relativity concept, and yeah, it is used finding the nearest neighbor classification in time series data. History and inventories, it's developed by Justin DeHorty, who released this as an open source trading view indicator in early 2023. We will go through this trading view indicator and what its features are as a part of this video. Okay, and what it does, how it generates signals and all that. It quickly rose to popularity. It became top 10 editors picks, and 20K plus bookmarks were done on TradingView due to its unique ML integration. How it works, it embeds price, value, volume, and momentum. So these three things it embeds into Lorentzian space: price, volume, and momentum. These three things are embedded into Lorentzian space. Only thing that's missing is volatility here, but volatility you could use Bollinger Bands to find the 1 SD, 2 SD, 3 SD levels. uh, you can use it with along with this, but this already has the price, volume, and momentum features into this Lorentzian space. And this uses Lorentzian distance for nearest neighbor classification, and this model is more resilient to anomalies and outliers like news spikes. Suddenly some news came, it is more resilient to that news spikes and anomalies. It gives you a buy and a sell signal, a classification signal, and often this buy and sell signal is like an arrow or a marker in TradingView, and it integrates well with filters like 200 EMA, which is a trend yeah, super trend, which is again a trend indicator, ATR stop loss, which is stop loss related indicator. Okay, so how this Lorentzian space performances and examples of the Lorentzian space AML model in financial markets is backtest from Trade Searcher have shown compelling results. So WBA and company, which is Walgreens Boots Alliance, on 1 hour time frame when 75 trades were taken using this Lorentzian classification ML model. 8.46% risk reward ratio was there. A total return on investment of 108% was achieved. So 108 is very big achievement, almost double capital, right? And Unity, a company on 4 hour time frame, 75 trades when they were taken, risk to reward is 1.33, return on investment is 18.2%. Snap on a daily chart, 51 trades were taken, risk to reward was 1.74, return on investment is 42.05%. So TradingView scripts incorporating 200 EMA super trend have shown consistent results on US 500 in 1 hour chart, and Bank Nifty 4 hour and 15 minutes chart. When you incorporate this Lorentzian indicator with 200 EMA or super trend. Very good results are seen in Bank Nifty on a 4-hour chart and a 15-minute chart. One of the Reddit feedback confirmation confirms its adoption. So Lorentzian classification can be used to predict the direction of future price movements. So this does forecast the future price movements also. Okay, so that is the beauty of it. So it predicts the direction of the future price movements. It also tells you the prediction accuracy of the future price movement. So application across time frames you could do intraday from 5 minutes to 1 hour you could do. It captures short term trend shifts. You can add some EMA or ATR filters. Swing also you could apply 4 hour to 1 day time frame effective for multi-day moves you could capture, especially when combined with trend filters. Positionally, daily, weekly time frames also you can use. Long-term entries are confirmed by clear classification after major events. So trend searcher suggests that refine with chart patterns, volume analysis, and trend filters. Use trailing stop and multi-target exits. So when you use this Laurentian classification with chart patterns, which is price action, volume analysis, and trend filters, uh, then and use trailing stop or ATR stops, then it gives better results. So hedge fund and quant use cases, hedge funds can integrate this nearest neighbor Laurentian core into broader ensemble models. Ensemble is an AI model which has a combination of all the models. Example, combine it with LSTM, long short-term memory model, transformer model. You could combine this Laurentian nearest neighbor model also for robust forecasting. It's valuable during event-driven scenarios, especially when market behavior warps differentially than typical days. So that time, this is very useful. This model is very useful and it performs well. And it could be included in multi-layer forecasting pipelines, aiding in signal generation for intraday behavioral and trading. Okay, it's a forecasting tool, and you could combine it with so other AI models like LSTM and transformers to get a robust forecasting, and it's very works beautifully during event-driven scenarios, and its backtest results are also very positive. Okay, so around 108% returns are there, 42% returns are there on certain companies like Snap and WBA. Even on Bank Nifty, there is a consistent returns. Only thing is some filters you need to use, like chart patterns, volumes, and trend filters have to be used. So summarizing this, inventor is Justin Doherty. It's an ML classifier using Laurentian distance and nearest neighbors. It captures time warp relationships in price action. Backtest results show 18 to 108% in various time frames on companies like WA, Snap, and Unity. Strategy is you can use Laurentian this ML indicator with 200 EMA, super trend, and ATR stop loss. Time frames you can use it on intraday swing positional. Hedge fund event driven strategies this could be used. Ensemble signal input it could be used. Anomaly resilient classification it could be used for. It could be used on multiple platforms like US stocks, indices, crypto, and bank nifty. The final takeaway is this is a model. This Laurentian classification model is a pioneering blend of ML and advanced geometry, and it delivers robust classification based trade signals across multiple time frames. And its strength lies in anomaly handling and event sensitivity, and it's a strong candidate for hedge funds seeking AI driven edge for event driven strategies. Backtests show solid results. Okay. But again, risk control should be there and thoughtful integration should be there. So let's see how this AML classifier is there. Okay, so this is the Laurentian classification uh, indicator. Okay, so if you indicate it, this is how the numbers come. Let me open this indicator so that we'll go through what it means. Yeah. So this is a machine learning Laurentian classification. So what it's doing is it's pointing some numbers. Okay. So it's giving you a signal. So this is a sell signal. This is a buy signal, and then numbers are being pointed. Okay. So red numbers means it's sell, and green numbers means it's a buy. Okay. So that's what this is, and let's go deeper into this. So yeah, JD Herty is one who made this indicator. It is the top picks, editor picks, and it has 24.8K subscriptions to it. So what does this tell? This particular thing tells is it's a classifier. This Lorentzian distance classifier is a machine learning classification algorithm capable of categorizing historical data from multidimensional feature space. Okay, this indicator demonstrates how Lorentzian classification can be used to predict the future price movements. Okay, predict the future price movements when used as a distant metric for novel implementation of approximate nearest neighbors algorithm. So background, he tells, basic Lorentzian space is best known for Einstein's theory of relativity, and it's used in theoretical physics, but it's also applicable for trading. And yeah, what he says here is this Lorentzian space is good suited for time series data, and the hypothesis and empirical studies show that Lorentzian distance is more robust to outliers and noise than other indicators like Euclidean distance. And Lorentzian distance outperforms other highly regarded metrics like Manhattan distance, Bhattacharya similarity, and cosine similarity. Okay. And he also says that that when dealing with financial market data, such as FOMC meetings or black swan events, this is very good. This particular indicator is very good, and this event-based distortion market data uh, is basically similar to gravitational warping. Okay, so it is good for for financial markets, especially during certain events. Okay. And this is how he classifies it: CCI, ADX, and RSI, and nearest neighbors and farthest neighbors. Okay. How to use this indicator? So basically, if you see this, so these are all the categories or model assigns to each candle. Basically, more positive numbers indicate that bullish sentiment is there, whereas more negative numbers indicate bearish sentiment is there. Okay, sequential patterns of these numbers can be caused to help identify fractals and inflection points. So basically, more negative numbers are there, it's a bearish thing, and more positive numbers are there, it's a bullish thing. Then there is intensity of the signal also. So this is confidence level by this model, which basically tells entry point, okay, of where we need to enter. And this line is an estimate based on kernel regression using a rational quadratic kernel. So this is basically this line is predicts basically that this is how it's going to be, and the real thing is most likely like this. And it also gives you statistics. When this model is applied on the 2000 bars, on back tested, how win rate is how much on how many trades, and what is the win ratio and stop loss hits. Also, it gives you this particular indicator. Okay, so that's what this is, and it uses a lot of features like RSI, CCI, ADX. All these are used. So this is the Lorentzian classification, guys. So if I apply it today, if you see, more negative numbers are there, which basically means that till here the market is bearish, and from here again positive numbers are there, which indicates bullishness and bearishness. Yeah. So that's it for today, guys. So this is a Lorentzian classification AML model, which can be used to predict the prices, and it's a AML model, which has which is very good when event driven things are there, and uh, for anomalies, it responds properly, and back test results have been very positive, generating 108 to 42% returns. Yeah, so that's it for today. You need to use some filters also, like you could use a Bollinger Band for volatility, and EMA super trend for trend, and stop loss for further refining this model. Thanks everyone for joining the call. Have a nice day. Bye.